Coming up on Market to Market, President Obama calls for more energy, manufactured goods, and jobs to be made in America. Those seeking the presidency sail briefly to the choppy waters of agricultural subsidies. And the Agriculture Department raises the bar on nutrition in school lunches. Those stories and market analysis with Sue Martin next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, January 27 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. The economy grew late last year at a rate that, in normal times, would suggest it's healthy. But to quote the Bob Dylan song, "The times they are a-changin'." The Commerce Department reported Friday that the U.S. economy, as measured by gross domestic product, expanded at an annual pace of 2.8% in the fourth quarter of 2011. That's its fastest rate of growth since the spring of 2010. But it's not enough to make a serious dent in unemployment figures. Consumer spending, which accounts for about 70% of U.S. economic activity, grew at a 2% annual rate in the fourth quarter, a modest improvement from the previous three-month period. Earlier this week, the government reported orders for big-ticket durable goods rose 3% last month as a 19% increase in demand for commercial aircraft accompanied smaller gains in orders for autos and auto parts. Excluding transportation, however, orders still rose more than 2% last month in that category's best showing since March. And business investment in core capital goods like computers rose nearly 3% in December to a record $68.9 billion. Manufacturing has been key as far as the success in the economic recovery. And as he unveiled his blueprint for the economy this week, President Obama called for more energy, manufactured goods, and jobs to be made in America.
Tonight, I want to speak about how we move forward and lay out a blueprint for an economy that's built to last. An economy built on American manufacturing.
Touting the creation of 3 million jobs over the last 22 months, Obama pushed what he calls a blueprint for America that includes provisions to incentivize job creation by denying tax breaks to companies that outsource jobs, stopping the practice of avoiding taxes by sending money overseas, and giving tax breaks to production of goods in the United States, including a special break for high-tech products. Following his State of the Union address, the president took his show on a 5-state road tour where he called for tax reform to ensure more products and more jobs are made in America.
But we've got to seize that opportunity. We've got to help these companies succeed. And it starts with changing our tax code. It starts with changing our tax code. Now, right now, companies get all kinds of tax breaks when they move jobs and profits overseas. Think about that. A company that chooses to stay in America gets hit with one of the highest tax rates in the world. That's wrong. It doesn't make sense. We've got to stop rewarding businesses that ship jobs overseas, reward companies like Conveyor that are doing business right here in the United States of America. You know, folks don't have unrealistic ambitions. They do believe that if they work hard, they should be able to achieve that small measure of an American dream. That's what this country is about. That's what you deserve.
In addition to a manufacturing renaissance, the president's vision also includes increased domestic energy production. While calling for the elimination of subsidies for oil companies, the president championed recent gains in U.S. energy self-sufficiency.
And nowhere is the promise of innovation greater than in American-made energy. Over the last 3 years, we've opened millions of new acres for oil and gas exploration. And tonight I'm directing my administration to open more than 75% of our potential offshore oil and gas resources. Right now, American oil production is the highest that it's been in 8 years. That's right, 8 years. Not only that, last year we relied less on foreign oil than in any of the past 16 years.
In addition to fossil fuel, Obama wants to increase the use of alternative energy. His plan gives $5 billion in temporary tax incentives for solar and wind products with parts assembled by American workers. According to administration officials, the multiplying effect would drive $20 billion in domestic manufacturing. And with natural gas prices falling to 10-year lows last week, the Obama administration believes the clean-burning fuel could support nearly 600,000 jobs.
The development of natural gas will create jobs and power trucks and factories that are cleaner and cheaper, proving that we don't have to choose between our environment and our economy.
Republicans, especially those seeking the presidency, have a few ideas of their own on how to grow the economy. In not one, but two presidential debates in Florida this week, the four remaining candidates outlined their fiscal priorities and alternated criticism of their opponents with that of President Obama. And in a brief exchange, former Speaker of the House Newt Gingrich talked a little sugar and offered his insight on factors influencing lawmakers, lobbyists, and farm subsidies. As the Republican primary calendar shifts south to Florida, a smattering of regional politics have seeped into the political discussion. This week in Tampa, Florida, former Speaker of the House Newt Gingrich provided insight into the sugar lobby's powerful influence in Washington.
Speaker Gingrich, in Iowa, you are a big supporter of ethanol subsidies. Here in Florida, sugar is a very important industry, and it's subsidized as well with import restrictions, quotas. There's a conservative movement to do away with these programs. In the case of sugar, critics say it adds billions of dollars to consumers' grocery bills every year. What would you do about that?
Well, I pretty enthusiastically early in my career kept trying to figure out how to get away from the sugar subsidy. And I found out one of the fascinating things about America, which was that cane sugar hides behind beet sugar. And there are just too many beet sugar districts in the United States. It's an amazing side story about how interest groups operate. In an ideal world, you would have an open market. And I think that would be a better future, and frankly one where cane sugar would still make a lot of money. But it's very hard to imagine how you're going to get there. I spent a lot of time trying to reform agriculture when I was Speaker, and I would say it was one of the 2 or 3 hardest things to try to do, because the capacity of the agricultural groups to defend themselves is pretty amazing.
Gingrich's acknowledgement of ag industry lobbying power is especially significant in light of his aggressive stance against special interest groups from a litany of other sectors. But Gingrich's Republican counterpart, former Massachusetts Governor Mitt Romney, called for an end to all government agricultural support.
Governor Romney, you're getting some campaign support from sugar growers. It's a very influential group in this state. What's your view on the sugar subsidies?
Yeah, my view is we ought to get rid of subsidies and let markets work properly.
The brief debate over sugar supports riled some farm state lawmakers who called the remarks from Gingrich and Romney as misinformation. North Dakota Democrat Kent Conrad, whose constituents produced 5.6 million tons of sugar beets in 2010, defended the federal sugar program this week. Conrad said, "There is no cost to the government at all from the sugar program. The sugar program is critically important to tens of thousands of jobs in this country. They say they care about jobs. How about jobs in rural America?" According to Conrad, not only does the federal sugar program serve at no cost to taxpayers, but enables USDA to limit foreign imports of sugar, control sugar sales, and shift surplus imports to ethanol production in an attempt to stabilize prices. The sugar industry itself is not above campaigning. Citing American Diabetes Association data, the Sugar Association says it is a myth that eating too much sugar causes diabetes. And for decades, Big Sugar has waged a battle against man-made sweetening agents like high fructose corn syrup, which some critics believe is responsible for increased rates of obesity. The problem of childhood obesity is not lost to the Obama administration, and the Agriculture Department released tougher nutrition standards this week for school lunches consumed by nearly 32 million young people. On Wednesday, the Obama administration announced the first major nutritional overhaul of school meals in 15 years. Because of rising concerns regarding obesity in children, the new regulations cap, for the first time, the maximum amount of calories contained in school lunches. The new rules will also increase the amount of fruits, vegetables, and whole grains in meals while reducing the levels of sodium and saturated fats. Milk will be required to be low fat, and flavored milks will have to be non-fat. While the new requirements are not as aggressive as many had hoped, some conservatives argued the government should not tell school children what to eat. Last year, Congress blocked the Agriculture Department from limiting French fries and pizzas, and a bill passed last November to allow tomato paste on pizza to continue to count as a vegetable. Some changes to school lunches will begin as early as September, with others being phased in over time. The guidelines apply to lunches subsidized by the federal government, and a child nutrition bill signed by Obama in 2010 will help school districts offset some of the additional costs incurred with the new program. 6 cents of additional funding is being offered per lunch, but USDA estimates the amount will not always cover the additional costs associated with healthier menus. The difference is raising concerns in many school districts that already have stretched budgets for education, that those budgets will be even further strained. The Federal Reserve's announcement that it expects interest rates to remain low until late in 2014 pressured the dollar this week and helped push grain prices and oilseed prices higher. For the week, March wheat gained 37 cents, while the nearby corn contract moved 30 cents higher. Soybeans virtually matched last week's rally as the March contract gained 32 cents, while nearby meal prices advanced $10.30 per ton. In the softs, cotton gave back most of last week's gains as the March contract shed nearly $3 per hundredweight. In the dairy market, nearby Class 3 milk futures gained 23 cents, while the March contract moved 4 cents higher. And in livestock, the April fed cattle contract was up 73 cents, feeder cattle were up 75 cents, and the April lean hog contract moved 32 cents higher. In the currency markets, the euro rallied 282 basis points against the dollar. Crude oil gained $1.23 per barrel. COMEX gold advanced $62.70 per ounce. And the Goldman Sachs Commodity Index gained more than 15 points to settle at 667.80. Here now lend us her insight on these and other trends. One of our regular market analysts, Sue Martin. Sue, good to have you with us.
Thank you, Mark.
Well, a lot of stuff going on as we begin 2012 in earnest. We had the USDA report. That was a big market mover. Concern about dry weather down in South America. But, Sue, a big lingering problem continues to be the situation in the Eurozone. What do you see happening over there?
Well, I think that it is a concern. I think there's getting to be an attitude that Greece will probably default and fall away. And the concern over that is I think everybody's accepting that, and it's been priced into the market. I think what the problem is everybody's concerned that's going to be starting to create a domino effect. You've got Spain with an unemployment number of a little over 22%. That's huge. Spanish bonds, I think, brought in about 15% return. That's quite high too. And then you've got Italy coming up behind that, but there's others also. There's Cyprus, there's Ireland, there's other, Slovenia, there's other countries that will come into play as well and probably be in the same situation. So it is a concern, but I think the market's handling it better this go around. Probably because there's so much more focus being split in the media between Eurozone and also the elections and the Republican nominee who's going to be there and President Barack Obama's campaigning.
Well, it's going to be interesting year. It always is in a presidential election year too, which can cause a lot of strange things to happen. And this strengthening dollar, and then we're seeing a little bit of a fallback in the dollar. Obviously, the Fed's, this easing continues. It may not be QE3, but a lot of cash out there, and not touching rates until 2014. I mean, this is pretty spectacular stuff.
Well, it is, and when you look at the money they've been printing, and it isn't just here that money's been printed, it's overseas too.
Sure. But
the money that's been printed, and you see all the investing that's coming in, money leaving Europe, leaving China, coming to the U.S., it's going to be pushing and they're investing into the dollar. But what's happening is that it also is, with all this money being printed and cheap interest rates, at some point I think we're going to get an inflationary feel out of this, and it'll pick up a kind of a bullish attitude.
All right, well, let's get down to some specifics, and let's talk first about what you see in the wheat market. And kind of the general commentary has been that there's a lot of wheat available around the world. There's been some rumblings, maybe not as much wheat in that Black Sea area as they thought.
Well, there isn't. There's a concern over the Ukrainian wheat. It's thought that the estimates range anywhere from 26 to 33% of that crop is going to have to be replanted in the spring with something else. You've got Argentina lowering their estimate of wheat by about 1 million metric tons. At the end of the day, when you look at it all, you could be losing about 5 million metric tons of feed grains. That's a huge number. And then you look at our situation, and not all the soft red wheat got planted. And you've got the weather still, while we're catching some moisture across, and wheat does look good in the plains in many areas. The jury's still out on that crop yet.
Yeah, and so there's still some concerns. We could be a surprise, and it's certainly worked its way into a lot of rations, particularly in the West.
Well, it has. And the other thing I think, too, is the basis has started to improve on wheat. So the wheat market has picked up. And, of course, in December, we had a huge, it was almost record short position by funds. And so when you get to that situation, everybody knows the story. They're on board. The markets usually turn and give you a bounce. And that's kind of what we're seeing right now, is that type of situation. There's not a lot of snow cover, so if we were to ever catch a really cold forecast, it might create a little flurry there too. But for now, demand's picked up a little bit for wheat, and I think the market is less enchanted with the short side.
It's a freaky weather system out there right now. So I mean, and you talk about the grain belt and the wheat belt particularly, going up through northwestern Iowa, and I was looking at the map, southwest Minnesota, and on up through eastern Dakotas, western Minnesota, and it's not much snow up in North Dakota either. Are you worried about a weather issue this year?
Well, I think what's going to be interesting is to see, does the La Nina continue to weaken? Right now, it's my understanding that it is starting to weaken. And if that is the case, and it continues to weaken as we go towards early summer, then we may start to catch a little bit of rain. It depends, or if you make that transition into a La Nina or an El Nino, then you might turn warm and dry. We're fairly dry in the upper Midwest, and I think that if we go into spring, the one good thing that we have to look at for in North Dakota is those were areas that they were so wet for the past 3 years. So they're going to be able to get corn planted this year, and that will be good. And then farmers are ready, in Iowa, Illinois, Nebraska. There is so much fertilizer on corn, that farmers are ready for spring. So if the weather's conducive or helps them out, they'll get this crop planted pretty fast. And that old saying, plant your corn in the dust and your bins will bust, could be a year like this one.
We'll see what happens. Let's talk about the corn market. What's your acreage number at this point? You kind of go with Informa over 94.5, 94.8?
I think so. I think we're going to hit 95, especially, and the spring will have something to do with that, with the weather, because if farmers get in and they've already got a lot done, the ability of getting seed will be one issue, but you'll be able to get seed. It's rather what kind of quality it is. But once they get planting, it'll go in easy. They'll plant more than what we think. They love to plant corn. So I think we're going to get the acres. Corn still pencils out much better when you take all the expenses and infuse those in, except land. You make way more money on corn than you do on soybeans. So, and you look at that ratio, used to be 2 to 1, and right now we've got the ratio behooving corn being planted. And the fear is, of course, we don't know yet what the South American crop's really like. We hear lots of estimates. Brazil's basically Rio Grande do Sul. I've heard some of the early corn planted there or harvested there is coming out around 50% down. We've seen pictures of ears of corn out of there, and it doesn't look good at all. Tipped back ears, small ear size, small kernels. Argentina, of course, is the one we're real concerned about, number 2 exporter. So we're hearing production around 22 million metric tons on corn. USDA sits at 26 now. I look for them to lower about another 1.5 million to 2 million metric tons in
They're always a
February.
little skittish on that early on, aren't they?
Yeah, they are. They're slow to come around, but I think it'll happen.
All right, so corn price. We plant 95 million acres. Let's say we harvest, 88 or so, and we get good weather.
You're going to have a carryout over 2 billion bushels.
Well, then what's the price of corn going to be?
It's going to go down. I think that we're in a year, I look at the year of 2012 as a year that's mildly bearish, let's put it that way. Some people may be more rampantly bearish, but I think we've got a year where we are in a negative trend, but we're not ready for that dump and dive type thing. I think that we have a market that's pacing itself. You've had the highest basis level for a month of January in 10 years. I think that farmers are probably holding at least 50% of the crop in their bins. They're not interested in selling anything now until summer. They want to see what the weather's like. In the meantime, ethanol plants in some areas covered all the way into the end of March. But what about April and May when farmers are busy and they sure aren't going to entertain hauling corn to an ethanol plant? They're going to have to be bidding to get some grain stuck behind them so that they will be okay. I think that when I look at the market, I think basis will be good even in through spring. And but beyond that, I think as we get into summer, if the summer weather's good, they'll just pretty much go hand to mouth because of farmers being able to sell more grain, and they'll have to get their bins ready for fall. If they're looking at a big crop, they'll have to move grain.
That's right. And yeah, it could be a tale of two crops where we're running out of the 2011, 2012 crops. So we haven't got the 2012 in the bin or started yet. Could we run into one of those scenarios? And that would go with your cash corn situation.
Absolutely. That could happen. And I think that, again, you get in, it depends on the South too, how early they're able to get in and harvest. So there's lots of little factors here that are going to make a difference. But at the end of the day, I look for us to break prices down this year into about October.
What kind of price is that? Is it breakdown?
New crop could get to $4.49.
Okay. Do you want to buy some puts in here? Do you want to get some insurance? What are we going to do, Sue?
Well, for now, I've been kind of holding off. We've had a nice rally back off of the government report, so that's been a godsend, but it's all because of Argentine weather and a little bit of Brazilian weather. There is a ridge, a high pressure ridge that's kind of centered over central Brazil, and they're watching that because if it starts to set in place, it'll block rain from coming into southern Brazil and central Brazil. That will be a big thing.
They've had relatively good conditions up till now.
Very much. Yeah. And so I think that until we know more of what this crop is really like, but I think pushing it down to 20 or under is getting a little overambitious. I think that corn, to be good about this, if you look at beans and corn or wheat, none of them have taken out a previous major high. So that said, we're still in a bear trend until we do that. The 666 level on March corn is a major resistance. It stopped the December contract. So far, it's stopped March. We have to get through that. You get through it, you'll go up and test the 685, 695 area. $7 will be psychological.
All right, 666. All right, let's move over to the beans, Sue. We don't have a lot of time left. The soybean market has kind of been mirroring corn, and again, obviously concerns about South America. But the third leg of that stool is what's China going to do this year? What are we going to see?
Well, I think China is. I'm starting to turn my attention into a different mode. I think that we've been so accustomed to this just-in-time inventorying that started back in the 90s and has become so aggressive here in the 2000s. And I think what's happening is that if we start to see good demand this year, and of course it could be even more next year, I think what's going to happen is it's going to be that they're rebuilding their reserves. I think that they've watched what's happened around the world. Food supply's tight. And we don't have a burdensome carry right now on much of anything. I think that we're going to start seeing this trend go back to having reserves. And that will give us some good demand for a while. But down the road, longer term yet, but down the road, that's not going to be a good thing for farmers.
All right, you think that'll happen in the United States? You think it'll happen in China?
I think China will be doing it. There are 32 countries that are having elections, what you call presidential type elections this year. That's a real important thing. And we're going to see lots of changes, I think. And China, of course, has their change of guard, whatever you want to say, in November, so October, November. So that's going to be very important to see also. And there's a lot of unrest happening in China. You don't hear a lot about it, but it is. And food prices extremely high. In fact, I looked at a chart on my way down here today that showed wheat prices, cash wheat prices in China are actually the highest they've been in over 10, 12 years.
That's right. Still regarding our crops as cheap. So 10 seconds, bracket me, bean prices. What do you think we're going to do? Lousy weather year, good weather year?
Well, I think that we're still going to try to push this market a little higher. It's acting pretty sluggish at the moment. We're banging up against a 100-day moving average.
Right.
If we can get through that, you might move this market up to around 1255, 1260, something like that.
And you'd sell that?
Oh, yeah.
All right. Low side?
The low side, I think we still have a chance for beans to go down before the end of the year, and check out the 985 to 1020 area.
Okay. All right. Let's move on to livestock. Brighter picture there, and the cattle inventory report really kind of confirmed that. What are your thoughts on these numbers? It still looks like maybe a little bit of increase in the breeding herd finally, or is that just a replacement on heifers?
Well, the interesting thing was that the total cattle and calves was basically, that inventory is the tightest or smallest since 1958. And then you look at the cows and heifers that have calved, and that number came in down 2%. Milk cows up 1%. Heifers held back for beef replacement up 1%, which says we're starting that holdback, which means meat gets tighter.
Right.
Numbers of cattle get tighter, and that should be pretty friendly as we go down the road here for the April, May, June, July, August period.
You're friendly to beef.
Very. I think that, but here's the thing, it's all about supply. We know the supply. Our thing is, what about demand? Is it going to continue to hold? And I do think domestic demand is going to be good, but what happens with China and other parts of the world if they continue to really contract?
All right, there's a concern. All right, and pork exports are going to be critical there to the hog business.
Well, it is, and again, this winter weather has been pretty ideal, actually. It's not backed anything up, so we're very current. Packers are looking at a current supply. They're buying hogs. The demand for pork has been pretty good. We need to see how much China's been buying. I think consumption of meat is slowing down in China, and so that may be a concern for hogs. But I think overall, you're looking at two bullish markets. They may go for a setback first and then come back again.
All right. Sue Martin, as usual, appreciate your insight. That's going to wrap up this edition of Market to Market. If you'd like more information from Sue on where these volatile markets may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, streaming video of our program, and links to our Twitter feed and Facebook page, all free at the Market to Market website. And of course, be sure to join us again next week when we'll examine the factors contributing to the smallest U.S. cattle herd in 6 decades. Until then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.